in this dancery. We got y'all open, now you're floating, so you got to dance for me. Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Let's get it rocked up on that fun up in this dancery. We got y'all open, now you're floating, so you got to dance for me. Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Let's get it rocked up on that fun up in this dancery. We got y'all open, now you're floating, so you got to dance for me. Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Let's get it rocked up on that fun up in this dancery. We got y'all open, now you're floating, so you got to dance for me. Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Come on, everybody, get on now, 'cause you know we got to get it wrong. Mary J is in the spot tonight, and I'ma make you feel alright. Come on, baby, just party with me. Let loose and set your body free. Leave situations at the door, so when you step inside, jump on the floor. For me, don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me.
Yeah, I have to be there right at 6 o'clock. Cool with everything except for people at Gregor's.
Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Let's get it rocked up on that fun up in this dancery. We got y'all open, now you're floating, so you got to dance for me. Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Let's get it rocked up on that fun up in this dancery. We got y'all open, now you're floating, so you got to dance for me. Don't need no hateration, holleration in this dancery. Let's get it percolated, body weighted, so just dance for me. Dance for me. I'm losing it. I'm losing it. I'm losing it. I'm losing it.
Traders. All right, guys, it's that time. We got a big one for you guys today. All right, traders. All right, it's that time again. Scrooge's Juice Bar is live. Guys, we're here every day trying to find you the berries that have the most juice for you to play. We're going to be doing a rundown of some short squeeze opportunities, which I know is super popular, really hot right now. We're going to be doing some insider tracking, as well as looking into a trade that we took on yesterday, a couple trades we took on yesterday that one did very well. One, kind of treaded water. Not really a big loss, so it was okay. So we got a couple trades from yesterday. We're going to highlight. Another thing we're going to roll on to is we're definitely going to get into some credit spreads today, guys. I know a lot of people were here yesterday for the credit spreads, and they were disappointed that they were not able to see that in action. I said that I was going to wait till Friday to go ahead and run those, but there's no reason we can't go through the logistics. There's no reason we can't, kind of break down how they work. We can get into them and look at how we would even close them on losing days and stuff like that. We can kind of get all that stuff out of the way this week without having to really worry about waiting. I won't log any of it. It won't count towards the record. We're still starting fresh next week with a brand new record. We're going to do it from scratch. I'm going to show you guys, 50 wins and 7 or 8 losses. So we're going to do it here live. We're going to do it. We're going to be here every day at 3:00. Okay. All right. So let's get this thing started. Today we're kicking off. We got the GameStop shorts. Dealt $1.4 billion in paper losses. I wonder why they say paper losses. I guess because of how the contracts work when you borrow, when you short. But they said absolutely got crushed, guys. So I guess the big thing today is everybody's interested in these short swings, but what happened the last time? Okay, everyone jumped in at different intervals. They maybe made a little bit of money. They maybe made a lot of bit of money. But at some point, nobody knew when it was over. Nobody knew when to stop putting money into the play. And unfortunately, a lot of people at the back end ended up losing a lot more than they gained. Well, that's going to be the problem with these short squeezes, because as I'm about to show you guys, the shorts or the puts or the bears are in control the majority of the time. So when you try to time these things exactly right and you want to say, okay, I want to get on GameStop, I want to get on an AMC, I want to be there for the big, big boom, Well, the fact is, as I'm about to show you guys, most people won't be there for the big, big boom. Most people are going to be there during the time where the Bears are winning. And it's just a timing thing. And let's get into this right now. All right. So, what I did to learn how to do this is I went ahead and went to this video here. It's called The Short Squeeze, How to Ride the Momentum. It's by Stocks to Trade. And basically, what he explained is that you don't need to catch the squeeze before it happens. In most situations, it's a multi-day play or it's a multi-move to the top. So when I watched this video and I went back and I looked at some short squeezes that happened, literally everything he said was in play right in front of my eyes. So let's do some of that for you guys here today, right now. Okay. So looking at this, we got FinViz is the screener, free, completely free. Anybody can use it. All you have to do to change, or all you have to change in FinViz is the float short. Change it to over 25% to give you a list here. I'm going to go ahead and refresh this. I'm not sure. Okay, there we go. All right, so we're going to get some pretty good information here. Not only are we going to get the float short, which seems to be the absolute greatest catalyst for a short squeeze, but you can also see that institutional transactions seem to be pretty high on ones that we have just found out in the last couple days that are squeezing. Hollow was trending yesterday. Everybody was hashtag Hollow. Oh my gosh, it's popping, it's popping. And today was FFIE. Everybody, oh my gosh, oh my gosh, oh my gosh. Well, what do we see in both of those plays? We see that the institutional transactions is them dumping their positions. Might that be a catalyst for the play, or does that happen shortly after the short squeeze? We'll have to keep an eye on this to kind of hone that in and tell for sure. Here you can also see the institutional ownership. You can see that the insider transactions are here and the insider ownership is here as well. So you got some great information. You got the float short, the float, a few different things. Volume's always very important when it comes to these plays. As you can see, the one that absolutely went parabolic today was FFIE, and you can see with the volume absolutely says that that's true. Lots of people wanted to be in on this play. They either got in late, they took profits, whatever it might have been. This was a huge, huge high volume play today. Okay, does that indicate that the squeeze is going to happen? Maybe. So let's look at these numbers as we go along and let's kind of compare them to what we see on the chart. So the very first one we want to look at is that FFIE. And we can see that it did a very, very nice squeeze today. Now, the other thing that we can see is that stocks to trade video, how he explained that this works, okay, how this gets set up. Check this out, all right? The first day that it squeezes, it's going to pop. But don't worry, you didn't miss out on anything. And if you watch this video that I had just put in there, he's going to say this exact same thing. But this is the gist of the video, okay? Is that the pop was not the big move anyway. What you wanted to do was wait for it to come back down a little bit and then show the strength by popping that area a second time. Once that area had popped a second time, that's the real squeeze, he said. That's the big move up that you can benefit from, that you can take advantage of. Now, can it happen 2, 3, 4, 5, 6, 7 times in a row? Absolutely. As you guys are going to see here in a minute, I'm going to show you another play where we get it. I think it's a 4 or 5 different plays on the way up. So is FFIE done? Not by any stretch of the imagination, guys. This is absolutely still in play. So what you want to do is basically just go ahead and set yourself a little marker here towards the top. Let's say 35 cents, right around there. And then whenever this alarm goes off, hey, boom, 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 and run over there and go check it out. And then you could go ahead and catch that next parabolic move on the way up. And hopefully you won't be late to the party like so many others, okay? So let's take a look at another one. Let's go to 30-minute candles. And let's go back a little bit. Now, we're going to go back in this one because I want to show you guys an example of it, the full squeeze playing out, okay? This is the full squeeze. So on the very first day, there was a pop. Let's get down in there real quick. Give me a second. Okay. Now, on the first day, there was a pop, all right? It had hit $6 when it was sitting at only 4. So that's a $2 swing there. Let's actually make that a little more exaggerated. So because it was a big pop. Okay. So when we had seen that big pop, all you had to do was set a timer, a marker right here to remind yourself, okay, I need to come back and check on this. Now it could take days and days and days, as we're going to show you here in a second, to realize these pops, but sometimes they happen really quickly, as you can see here. So we got the swing. You would have entered here, and then when you've seen this long upper shadow, would have been a good chance for you to get out. Now we're either buying shares or we're buying calls. But a dollar swing, $2 swings, $3 swings, hopefully is one, two, three strike swings. And if it's moving that far across the options page, guys, there's a lot of juice in those berries. But they are just getting started, as you can tell. So we hit our high, we pulled back again, but then we broke that high. Well, here it was post market, but you would have jumped in, okay, with some after hours trading, and you would have rode it once again up from $8 all the way to $14. Big upper shadows here. Go ahead and take some profits. Let the bears come in and short it back down. Now you wait. You wait for what? You wait for the crack of the high, the same thing that we've been talking about. So boom, we cracked the high, another position to take, another run, another sweep up, this time from $14 all the way up to $20. Guys, $14 to $20. Really think about what I'm saying to you. If you were in an options contract just a couple strikes away, not only are you in the money, you are in the money by a lot. And if you have still a few days on that contract, the speculative value of that contract is going to be through the roof. Just one of these could change your entire account. Okay, just one of these can change your entire account. But how many did we see? How many did we catch so far? There was 1, 2, 3, 4, 5. There was 5 giant swings to the upside. 5 times where you could have made a lot of money on a call contract. Okay. Now, let's talk about the flip side of this. Let's talk about the side that Deck always wants to talk about, the shorts. Let's talk. Well, I mean, I personally wouldn't short something that's in the middle of a short squeeze. I think that's only for crazy people. But we have put options that are still an option. Put options are an option, right? So if it does have puts, you can put it all the way down. And this is the reason why he was talking about this with GameStop, okay? Because what do you see from this chart? Not only is what goes up must come down, up, down, up, down, up, down, up, down, but the duration of down is so much longer than the up. The up, you have this tiny little movement here where the bears are, the bulls are in control. Then the bears come slamming in. The bulls take over. Then the bears slam in. The bulls come over. Then the bears slam in. So do you see? And then here, and then the bears take back control and ride it all the way back down from, let's say, $23 all the way down to 12. So lots of put action on the backside of these. So you're thinking, oh, GameStop, I gotta jump in. There's no more options. There's no more chance for me to make money. What do you see here? You see plenty of chances to put it on the way down. So when it comes to these short squeezes, there's not one move. You can get calls, you can get you can get shares on the way up, or you can just put it on the way down. As far as shorting it, I think that would be a little bit nutso. But hey, if you really feel like the momentum's gone, maybe you're looking at the volume, you see all the volume left. Everybody who was in it is over it. They moved on. Maybe that would be a good idea to go ahead and short it back down. That would be definitely a more risky play and something to do at your own discretion. Okay, so we're looking at Beyond. Beyond, it said that was in the middle of something special here. What's happening with Beyond here? Okay, so clearly we did squeeze with Beyond. This would have been your initial pop here, I believe. Sure, let's go ahead and say that was your initial pop. This is where you got in for a little bit more. Not anything great, but once this plateau or once this broke, at the end of the day here, and actually when he highlighted this, it was an end of the day play, and I think that's probably the best because if it shows you that strength in the last couple minutes of the day, you know the market's going to want to pump during the market hours where not that many people are trading, so not that many people can benefit from it. We see those huge overnight swings one way or the other, and this way you could really capitalize on that. So as soon as it broke this 787 level, you felt really good jumping in on shares or jumping in here, and you rode it all the way from about $8 all the way up to the high nines, maybe even tens. Maybe you had those diamond hands. Maybe you held on to the tens. But does that mean that this thing's over? No, based on what we've seen before, it absolutely could go. So it could take another week to just kind of down, 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 down. It could just put. But once you see that turn, once you see the momentum change, and surely once we see this trend or this top crack, jump in and ride it to the top. Okay, so a play like FFIE, still trying to work, still trying to move. We got ourselves a little marker there. Maybe I'll grab some shares. It's 35 cents. Why not? I'll grab some shares when that thing pops off. We'll see if we can catch a little action for you guys. Come back tomorrow and tell you about it, or come back here in a couple days and we'll go over it and we'll highlight why that was a great play and why I made lots of money and why I'm a genius and why I deserve all your subscriptions and maybe you're even your firstborn children. I don't know. I mean, that's to be talked. All right, I'm joking around. We're getting off track here. Okay, so Hollow, same thing. We got a huge spike. It crossed that high and spiked again. But I mean, is this thing done? I'm thinking no. I'm thinking we might see a few more of these really, really big rippers. So let's set an alarm, which I have up here already. We'll just put it up here somewhere. Obviously, we do want to wait till it cracks, but I want the alarm a little bit ahead of time. I don't want it to happen within 30 seconds. And by the time I get my broker open and figure out what's happening, you want the premium entry, right? So put some alarms for you guys. Use this stock screener to find plays. Watch that video I just showed you guys, get an idea of how to see how these are setting up, and then as they're playing out, grab them on the top side, grab them on the bottom side, play both sides. You will look like a genius. Your account will go up nice and quick if you catch a few of these. I believe that these are some of the juiciest berries on the internet today, or on the stock market today, based on the high volume, the quick swings, just all, it's the fact that you can catch it on the way up and way down. How often does that happen? Usually when something spikes, it spikes. When it comes down, it comes down. But when it's literally having parabolic movement to the top and to the bottom within just a few days, that's something you can just keep playing in, out, in, out. Okay. So you guys see that there's definitely some juice on these berries. We're going to move on. I spent a little bit too much time on that, but that's okay. We're going to move on. Okay. So the second thing that we do is insider transactions. Now, insider transactions, I go into a lot detail, when I have more time about why they're essential and why they work. I also have multiple scanners. Sometimes I use FinViz. Sometimes I use Fintel. Well, Fintel is not going to affiliate with me. It looks like they're not. They haven't answered my emails, so I'm not going to get another subscription. I want to figure out how to do this the free way, and that works out better for you guys anyway. That way, you don't have to buy any subscriptions to anything. All right. So, long story short, Deck put out a video about 2 months ago that talked about this FinViz. He gave some recommendations when it came to some of the filters that you can set here. And guys, I'm not going to joke with you. I plugged in his recommendations and it was like magic. Now I've changed just very, very minute anything, but just using this method to find plays, I was able I actually deleted it yesterday. You'll have to go back and watch the video from yesterday. But I was able to get like 70% success rate. I was able to hit like a bunch of 70%, 100% gainers. I felt like all of a sudden I can play options. All of a sudden I can pick them. All of a sudden I'm the smart guy who can charge you a subscription fee and call out and make people money and make myself a bunch of money. but then I started using the Fintel information and it kind of went down a little bit. It wasn't quite as successful. The FinViz, the free version, the one I'm going to show you here today, these scanners right here work. If you test these and you just kind of, okay, so anytime that I was wrong, it really came down to like entry, right? Maybe I was a day early, maybe I was 2 days early, but really, it really came down to entry. And when I go back and I test and I look at it, I was killing it. So I deleted all that. I want to start fresh with you guys. So yesterday we did a call. It was the put side. Okay, no, actually, we'll go over that here in just a second. I want to go over these right here while I got them. Okay, so call swings. What do we look for? Change from open down, relative volume over one. That's on both of them. We want the volume up. We want to be able to get in and out of these options plays. Okay. So you got change from open down, performance down, price over $20 on both sides because we want to play larger caps. Optionable, very important because we're playing options. Okay. And RSI oversold. That means it's just beaten down, beaten down. So we got down, down, down. But the one positive thing is that insiders are starting to add to their positions. So as of right now, there's nothing on this list that we can utilize, but this is something you guys can look at throughout the day. I personally love doing swing trades with these. I love jumping in at the end of the day when it looks like they're going to make a move. And son of a gun. Yesterday we did that and we ended up being right. So we took WGS live here yesterday in chat for a swing trade overnight. As of right now, I believe it's still pumping. Give me just a second here. Yeah. Okay, so it's still open because I really wanted to see what it could do. But this is the play that we took yesterday live. It's up 30% right now, 47% for the day, which means if we didn't enter as early as we did and we just entered at the end of the day, we would have been up 47%. I guess I got in a little early on that one. I was excited to get a play with you guys, but definitely. Some juice on these berries. You can see here right in front of your eyes that these swing trades are, they're decent. They're decent. This is the most success by far that I've ever had with options, especially swing trading. Wow, holding stuff overnight and hoping to wake up with a smile on your face. That's scary stuff, right? But sure enough, it's working time and time again. All right, so now guys, we're going to come over to the other side. This is going to be the put swings. So this is just the opposite, okay? The volume is still 1, the price is still 20, the option is still optionable. However, instead of down, it's up. Performance is today up. RSI is overbought, not oversold, but the insiders are starting to reduce their positions, okay? So that triggers this list here. Now, off of this list, the only thing that we're not playing around with is earnings. Now, we talked about this yesterday. If the price of your stock all of a sudden goes to a price that it has not been in 3 months because of an earnings, why wouldn't you take some profit? Or why wouldn't you get out of that play? So it doesn't, earnings don't necessarily mean that the guy has some sort of insider information. It might just be a take profit. Maybe they're giving, a lot of these guys are actually getting shares as part of their compensation package for being a board member or being an insider. So they have all these positions, they're a director of the company, CEO, whatever, so they have all these positions they're being awarded. Why wouldn't you cash out after an earnings when the price all of a sudden takes off to a price that it hasn't been in months? That's just logic, right? So we just avoid those completely. Moving on to the next one. Now, if it is an earnings play and we've given it at least a few days to kind of calm down and figure out what it wants to do and start making movement after the consolidation, I'm totally fine with that. But this is still too early. As you see, there's no decisions being made here, That being said, we do see a lot of upper wicks here. We do see that we're towards the top of these trend lines. So if you wanted to take a put here, I would say it wouldn't be terrible, but I wouldn't get something too close. So when we say swing trade, we say 2 to 3 week expiration is usually what we're looking at. If you can get a little farther outside, let's say like the monthlies right now are expiring about 40 days from now, get yourself a 40-day contract on this bad boy, a put. I'm cool with that. I think that would be a good play. As a matter of fact, let's go ahead and take a look at that. If I'm willing to say it, I'm willing to do it. So, guys, you will see as I'm doing this that this is a test account. With the options plays, I'm still in the testing phase, and you have to do your due diligence. So I strongly suggest to any of you guys, don't take any plays that I'm giving you here. Just just start jumping into stuff. Do what I'm doing. Jump on a paper account. Thinkorswim has a really great one. Jump on a paper account. Spend a little time paper trading, especially the spread that we're
Order
here in a minute.
filled.
If you don't know what you're doing in that situation, oh, okay, sorry. Yeah, if you don't know, what you're doing in that situation, you're gonna lose time and time again. So paper trade, chart, track, do what you have to do. Do your due diligence. Okay. So the options trade that we were looking at here was a put, if I remember, and we would go 38 days out. Okay, I like that. The spread's nice and close. We talked about. They make sure the buyers and the sellers agree on the price. If there's a huge spread, you won't be able to close. It's a nightmare. You don't want anything to do with a big spread. So um, maybe go up and down a little bit, kind of see know what the price will do. So okay. First of all, let's look at Bros and let's see how much we think it could drop if it does. So if it does drop, I guess we could say, maybe 34 somewhere down here would be good. Do we have an MA? Okay, MA is, I like the MA. So 34 would be an optimal target if all of a sudden it did just kind of start falling. So I'm okay being on the other side of that by maybe a strike or two at the most. Okay, so a $33 put I think would be great. I'm looking at one right now. It's $53. I love it. It's 38 days away. I'm going to go ahead and just buy, let's do two, because I like to do about $100 per play. And let's just go up 1 penny. I want to make sure this fills. And usually if you go up one, it'll fill a little better. Okay. All right. So Bros, we'll see if that fills us in there. It should be fine. Yeah, it's nice and under where we're at. So yeah, like I said, it did have an earnings, but it's showing a lot of weakness, and it could be, it could have found its high. It could be making its way back down. So we got a contract that's a little farther out to give us a little bit more protection. Okay. All right. So keep on working down that list. CRUS almost look, when you see a big old gap like this, you can almost guarantee it's an earnings, but clearly that hasn't found its center yet. It's still pumping. Here, same thing. All right, TTEK. Earnings starting to make its way back down, starting to want to come down to this trend line. I'd be cool with this. If there's a good option here, I'd be totally all right with that. So we look at, hey, we got our Bros. Okay. All right, 38 days out, because it's got to be 2 to 3 weeks, no less than. Because what if it takes 4 or 5 days to actually happen, and you just lost, half of your contract on intrinsic value? So you want to go ahead and not worry about that. All right, so guys, we see right here, this is not going to be a play we want to be involved in. The buyers and the sellers do not agree. This is 30 days out. We're not going call side anyway, but I just looked at call side. This is 30 days out. This is a very possible contract, and these guys do not agree on the price. So we stay away from that stuff completely. We're out of there. VITL. Okay. Yeah, earnings plays. So, it looks like a lot of earnings plays here. This one, wow, just taking off. Okay, so yeah, I don't really see any other plays there. I like Bros. It just looks like maybe it's going to turn soon. What we do on these guys is a 30% take profit and a 30% stop loss is roughly what we're looking at. 27% to 32, somewhere in there. When you see that number, get your money. When you see that number, get out. If it's negative, if it's red. Okay, so here we look, like I said, it looks like it's just going to turn down to me. I feel like it's at that moment. So that's all we can really do is just try to find a good entry. All right, guys, here's the moment you've all been waiting for. The credit spread system. All right, let's get rid of this, get rid of this. We're done with that. We're done with that. All right, so for the credit spread system, what we do is we run up over to SPX and we kind of just get an idea of what it's been doing all day. Let's go ahead and get a line on the top. Let's get a line on the bottom. And that's just for the day. That's the zone that it's been in all day long. Now, you're not going to want to go against momentum. How selling works is when you pick a side. Let's say we go ahead and get in on 52.65. That means we don't want it to go to that number. It's the opposite. Okay. We want it to go the opposite way. We want it to go down, down, down. Okay. And in order to get it to go down, 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 um, there's only one way to do that. And that's, sorry. I lost my train of thought. I was looking at something. Okay, so when you get on the top side, you really want it to work its way in the opposite direction. When it starts working its way towards your direction, you're going to start sustaining a loss because that option that you sold is going to start increasing in value. When it increases in value, that's bad. We want it to go ahead and go to worthless. Worthless is good. We make money on worthless. When the buyers lose, we win. Okay, simple enough. Now, why do we do a credit spread as opposed to just selling the option? Well, in order to sell a contract, you're saying that you are willing to sell 100 shares of that option at that strike. Now, I don't even have enough for one SPX, let alone 10, let alone 100. Okay. So these credit spreads are allowing you to play big cat plays. Okay. Without or option. Like, let's say you look at the option and you're like, wow, it's, $300, $400 per play. Well, if you go ahead and do a spread, which is just essentially buying a leg and selling a leg. And the sell is going to be the one closer to the actual price. So by selling the leg closer and buying the leg behind it, that gives you your collateral defined right there. As opposed to 100 shares, you're now just worried about the spread in between those two options. So if the spread is only $1, let's say we're trading SPY and we have 520, right now it would be a call 525, 526. Okay. That $1 for 100 shares is your defined loss. It's $100 for that. For SPX, we're trading at a $5 increment. So it's going to be 500 per contract. And I'll show you guys that here right now. So as you can see, the momentum has been going northwards all day long. It seems to have tuckered out a little bit, but we surely don't want to fight the momentum. That being said, we're not grabbing a put contract right now. And let me tell you why. With this sort of momentum and this sort of large movement that we've seen here, the put contracts are going to be very beaten down. So over the next 30 minutes that we're running this play, specifically the first 15 minutes. So we're going to start at 3:30 right now, right? We're going to open up SPX. We're going to draw the lines. We're going to get an idea of where it's headed. Then we're just going to wait. There's some good volume that comes in at 3:30, and when I used to run this system before 3:30, I would get caught up in that volume. So the reason that we're not trading this play for real today, and this the reason I don't want you guys to take this trade, is because of the economic data that's coming out. Tomorrow we have PPI, CPI at 8:30 in the morning. These economic days are the worst days to do credit spreads. There is crazy volume, crazy movement at the end of the day, quite consistently. And to get caught up in those swings is not what we're looking for. The whole thing about doing this end of the day thing that we're doing is we don't want volume. We want these tiny little candles that we see right here where nothing's really moving, nothing's really going on, nobody's really in it, that's what we need. That's going to allow us to be successful easier because throughout the last 20 minutes that we're in this play, if any big swings happen towards the direction we picked, we can get stopped out. So we're looking for a negative 200 to maybe 300% stop loss system. I'll explain why here in a minute. But what we're noticing here is that it's losing some momentum. It's starting to come down. If we see a few more red candles, I would say it'd be a good idea to go ahead and sell something on the call side, thinking that, hey, maybe the momentum has died out. Maybe a new trend is being formed to the downside. So, let's just go ahead and give a look at this. We're going to keep an eye on it. Nothing special yet. That'll give me another minute to kind of talk about the credit spread system. So when I first started this, I was running this from 9:30 in the morning till 4 p.m. And I was so stressed out. I couldn't even use the bathroom. I couldn't make myself food. I couldn't do anything without a tablet right here in my face all day. It's my phone, but whatever. Sitting here like this the whole day, like I didn't have any peace. Um, then one day a friend of mine came to me and said, hey, this credit spread thing you're always talking to me about. I've seen a video and this guy runs it in the last 30 minutes and found some pretty good success. So I said, all right, and went ahead and started that. And since February, guys, since February, I was able to double a $5,000 account, even after paying like $1,500 in fees. So actually, I went up about $6,500 on a $5,000 account in less than 3 months. You can scale this up. You can do this at any level. You can take this to the top. And the more I trade, the more other things I try to find, the more other stuff I try to do, the more I realize that there is nothing as consistent as this. There is nothing as low maintenance as this. You don't have to watch it that long. I'm in for 20 minutes most of the time, guys. I can show you the screenshots. If you guys weren't here yesterday, they actually deleted my entire history. All the positions that I have taken since I have first started the paper account are gone. They switched me over to Charles Schwab, and they just deleted everything. So before I would go in there and I would just show you guys, hey, look, here's my proof. Here's what I do. But this is all I got now. So as you guys see here, I started the system 215. I did take a loss here on the 22nd, but what you'll notice with that negative 450 is that it's surrounded by a 150 and a 200. So on that same exact day, the 22nd, I was able to get back $350 of the $450 lost. And that's the cool part about this system. Even the loss that we took the other day, I only lost $50. So, I'll explain why when it comes to how they give you premium, or how they give you the premium money. But as you enter, you automatically get to keep that. It's yours. So even if you end up taking a loss, it buffers a little bit of it. Here you'll see. Okay, so from 222 all the way to 318, I didn't take a loss. So roughly a month. It was 3 days under a month, 4 days under a month that I just didn't even take a loss. It was all wins. And then you go from 318. This one doesn't count. As you can see, that this wasn't a spread. This was something else that I was testing. And even though I went negative 250 to enter that position, I did close for a positive $200 on that. But that's not a spread, so that's not what we're talking about. So we go on down, and the very next loss that you see was actually 426. So from 426 all the way to 318, that was more than a month. So I had a month and like a week where I never had a loss. So as you guys can see here, this is why I'm so confident. This is why I can tell you guys that I know this works. Okay. Positions, WGS is coming back down a little bit. Bros, we might have came in on that one a little early, but like I said, we're so far out on bros. I'm cool. And by the way, if that keeps happening where we take like a little 10% loss at the very end, I'm just gonna enter. I'll just enter these at the end of the day. There's no reason not to. You know what I mean? So once we set up those insider swing trades, we'll just enter them right at the end of the day. Because I mean, I lost 5% today. I lost like almost 10% on this one yesterday. Oh, look, almost 15%, because that's why it was only 25 to 41. So I lost 16% yesterday just by it, getting in a little early. So, maybe an end of the day situation for these guys. We'll see. We'll see. Definitely keep testing those. All right. So credit spread, we're about to enter this position. Like I said, if it keeps bleeding to the south, we feel really good about entering up here. Let's see how far we can get up and still make the 10 cents that we're looking for. So 52, 55. So how we're going to enter this position, everybody, here we go. All right. You're going to do a vertical. Okay. Vertical. That's a credit spread is a vertical spread is another word for it. You're going to hear a lot. I prefer to have the sell on the top just so I always know where the sell is, and that I want the sell to be the closest to the price. Okay. So here we want to get 52, let's say 52.65 would be super safe right now. I know that we won't be able to get that, but let's see. Okay, 52.65 is the close one, and then 52.70 would be the next strike out. Okay, you guys see how that would work? If it was the put, it would be the opposite. It would be the put would be here, and then the buy would be the next one down. So this one, the buy is the next one up. And you'll see here that they're still willing to give us 5 cents on this, guys. That's not bad. But we have a stop loss of negative 200 to negative 300. I don't do nickel contracts because it is so easy for a nickel contract to go negative 200% or 300%, which is just 20 cents. When you can get in at 10 cents and then you have all the way till either 30 or 40 cents before you have to get out. It just gives you more wiggle room. I feel like with a 5 cents, you're almost always going to get stopped out and it's not worth it. So we're going to wait. Normally, if it was coming our direction, like if we're going to go put side, we would just wait for it to continue coming our direction to give us the fill that we want. Or sometimes we would even put it in for the higher to see if it'll give it to us. In this situation, I'm almost sure that we're just up too high. So I'm going to pull it down one. Okay. And you can see here that the spread might be a little bit, yeah, it's about exactly the same. So we get about 5 cents here. Just too high. I have high hopes. I have high apple pie in the sky hopes. Okay, but now what do we see? We see that we came down one more spread and it jumped up to 15 cents, maybe even closer to about 17.50. Now that's too high. That's too much. Okay. We want to catch a better fill. That's true. But something that's this high already, it's only going to take a little bit of a swing back up to stop us back out. Okay. So 15 cents. I love 15 cents. I love 10 cents. Let's take a look at this price action. At the very latest, guys, we're going to get in about 4:45. Okay. So we got about 7 minutes till entry. If you guys are, just be patient. Yeah, we'll definitely get there. Please don't be entering these. This is supposed to be a very high volume day at the end of the day. I'm not sure if GameStop and AMC has taken away all the thunder, but I'd really like to go ahead and not get this contract. What I would like to do is I'd like to go up one more, and I would like to get the 10 cents on this bad boy. Now, another thing I want to point out, just because we've had a little bit of a downturn here doesn't mean that that will continue. Nobody knows where this price is going, right? So when you look at the fact that it's had momentum pretty much all day long, might make you feel like, hey, I do want to be on the put side. And if you do want to be on the put side, I'm totally cool with that. Maybe bring out some VWAPs to give you some support levels. But I would just say, as long as you can be on the other side of this MA as like a final tripwire to protect you, just in case the price does come down, if you can get in right now for 5225 put, I'd be cool with that. 5225, 5220. Okay. And here, I'm going to go ahead and check this Tradecaster chat just to see if anybody's chatting with me. No, nothing going on there. YouTube, same thing. Nobody's talking. You guys are just absorbing the information. I like that. I like that. Okay. All right. Pull that back up, and I'm putting that right there. Everything looks good. Okay. All right. So, as you guys can see, when you see the negative here, there's not a lot of volume down there. They're not that interested. If the price comes down a little bit more, we might absolutely get that fill, but we might have to come up to 52.30 in order to catch it. Right now, what I'm seeing is just a pretty good little misdirection here, little reversal action happening here. Okay. So, could we get in this for 10 cents? I don't see why not. Do we want to go against the trend though is the question. I told you guys we get volume right there at 330. So if the new volume pumping in is saying that it's going to continue down or it wants to go down, I don't know. I don't like the put side today, guys. That's why we were looking at those calls. I don't like it. I don't think it's the way to go. Catching the high, or not catching the high, but seeing a high, seeing a long wick, seeing lots of red after that, just makes you think, hey, maybe it's tuckered out. Maybe we have a new trend forming, and we absolutely do. We're trending to the downside. So let's go ahead and get ourselves a play here, guys. If you're just joining us, please don't take this. This is just for testing sake. I just want everybody to get used to how this works, how this looks. Just kind of get used to filling positions, getting in and out. All right. So once again, we're gonna sell the side that is closest. We're gonna buy the side that is farthest away. I'd like to be up here at the 60. We'd be nice and safe up here, protected by this line here. Um, and the fact that it's starting to come back up a little bit means we might actually get a fill. We might get one where we want it to be. So we're gonna go ahead and just put that in right now. I didn't mean to click that so fast here. Actually, I wanted you guys to see the collateral side of it. Here, let's go ahead and just delete this. We got about 4 minutes left till we really want to get in a position, though. So let's go ahead and take a look at what's happening here. All right, so 52.60 should be good to go. All right, let's go. All right, so sell 52.60, 52.65. Okay, we want it at 10 cents and review. Okay, so here you're going to see that because it is $500 a contract times 10 contracts, that you're going to need $5,000 in collateral to play this play. And it's only going to give you $100. Now, guys, when I first told somebody that I was doing this strategy, or a couple times I've told people, they thought I was absolutely crazy. But when you look at the numbers that I just showed you guys and the consistency and the wins and the wins and the wins, all this means is if you're not paying attention and you're not going to market close, and all of a sudden the price goes absolutely parabolic, the most money you can lose in a single trade is absolutely $5,000. That's true. But that would never happen. We will be here. We will be here with market orders ready to close the first sign of trouble. Because when you have a 90% success rate, you don't care about losses. When a loss comes, you're just like, whatever, cool. Now I got that out of the way. I can get back to 9 more wins. And your thought process will change on the losses, and you're just going to want to cut them as quick as possible. As soon as you hit the negative 200, as soon as you hit the negative 300, just get out, just cut it, and you won't care because you're making so much money, it won't matter. All right, guys, we are getting down to the end here, and I really want to get into a play. So I'm going to show you guys. Oh, got it. We got it. 10 cents. We got it. It just did it. It's pumping up right now. It's pumping up right now, which I would never get into momentum. Do not play this. The put side right now looks like the beast. The put side looks like the beast, not the call side. Now, if you got a put way down here where I wanted to get a put, I'm okay with that. I'm okay with that. You still got your MA. It's going to protect you. And it has a long way to go before then. So if you got in down there, I'm okay with that. But you should not be trading. You should. Oh, what? We have the 10 cents. Go. There it is. Fill, baby, fill. Come on, baby. Come on, baby. 10 cents. It's there. Here we go. I feel like it's just going to kind of consolidate right in this zone for the rest of the day. We'll do another line here. No, not trend line. Horizontal line. All right. Yeah, I feel like it's just going to hang out like right here in this zone for the rest of the day. Little up, little down. All right, guys, we are in on the play. They got us a pretty good fill. It looks like they got us the 10 cents we wanted. That's exactly what we were looking for. 15 cents is also okay. I don't go over 15 cents because I want to control the wins. I want to control the losses. All right. Now, guys, because of the momentum, I believe this is going to be a loser. Okay. I do believe that with all my heart. So let's go ahead and get in something on the other side before we have to deal with that. Okay. So I just want to show you guys how this works. You know, that's the most important thing. 30. Is it still spiking? Yes. Okay, so we would not be entering a put here. You would have been entering the put right here with the momentum. Something right here. Let's say, I want to be about 35. Yeah, that's where I want to be. So go ahead and set that up because we need to watch this call if it keeps taking off on us. All right, so we want 10 cents. We want the 52.35 level. I'm okay with that. 52.30 would be better, but we have to see some movement down. And we're just getting in late. That's all. I really want to show this to you guys. We're getting in like right at 3:45 is about as late as I ever want to get in. So that being said, we would normally not. The reason I'm bringing this up is because we would normally not be grabbing the put while it's going the other direction because that put is devalued. You're going to get it when it's devalued, and then a little bit of a swing back, which is about to happen right now, is gonna change all that. It's gonna make it to where that devalued contract all of a sudden jumps up in value really fast, and you lose because you got the low side and then ended up getting screwed on the high side, which is the opposite, right? That's how it works when you're selling. So as you guys can see, the contract didn't really do anything. So they don't love it. They don't think that it's going to hit 535. I do. I say it's going to come on down and we're going to get our fill and we're going to be good. Watch. So it's at 5 cents here. We want 10 cents here and then once we're in, we want 0, 0, 0 across the board. Okay. That's how this is going to work. All right, guys, so I'm going to kick on a little bit of music while this plays. We have our levels. We know where we want to get in. If you're just joining this, you are not playing this. This is just for testing. This is just for people to learn how to do credit spreads, how they work, how the entries are going to look. Please don't enter anything unless it's a paper trade. There's going to be a chance to do this every single day. We start officially next week. Okay, we're not doing it this week because of the high volume at the end of the day. I just want you guys to see how this goes. All right. So hopefully this keeps swinging back down here a little bit and gives us a nice fill on the put side, and then trends between these two lines, which is where I felt like we could hang out for the rest of the day. I'm going to kick on a little music, guys, as this forms. And, yeah, let's have Hey, we got our 10 cents. We got our 10 cents. Fill it, baby. Fill it. Come on. Fill it. Fill it. Okay, we're in. We're in. Okay. Now, the cool thing about Thinkorswim is that unlike Webull, it does not charge you more collateral to get in on the other side. So the same $5,000 that we risked for the one side, we're good. We're covered. Okay. So that being said, we just doubled our money for the day, as long as everything goes the way we hope, without adding any more risk at all. That's why I trade TDA. I know the fees are crap, but if Webull's not going to allow me to jump on the other side when I realize that I'm wrong and get some of that money back, or if they're not going to let me jump on the other side when the price starts moving pretty erratic, I don't want nothing to do with that. This allows me to have a daily double. You guys are now going to get to see what the best case, well, hopefully if it continues, what the best case scenario is, which is sideways movement, and you're able to get the high side and the low side for a little daily double action, okay? It's called an iron condor. As you guys can see, it's actually right here. This is how you set it up. I don't ever do it that way, though. I always enter one leg and then the other leg as the chart is, kind of explaining that I should do that. So even if it's early and I've decided I want to go high and low based on these lines here, right? I'm still going to wait for the price action to start moving that direction to increase the value. Then I'll grab it at the increased value, and then when it makes it swing back down, I'll grab this one at the increased value, which is what you guys just watched me do. And grabbing it at that increased value is what you want to do, not when it's completely the other direction. So like these candles here are a really great example. If this was the movement at the end of the day, you would not be able to grab a put at all. Maybe right here when it pushed back down a little bit, but no, you're going to have to find a spot back up here. And if it keeps going, then, then you can get in for something. But, do you guys understand what I mean about the value of the contract? It's going to get beaten up by the movement, or it's going to be inflated by the movement. So you don't want to just jump in. You want to let those candles inflate it a little bit, and then you'll catch it on the way back, which is what you guys seen me do. I didn't grab it at the 0 cents. I didn't grab it at the 5 cents. I put in an order for 10 cents, and I let it pump up to that amount. Real nice. If you guys have any questions at all, feel free to type them in. We got a few minutes here. We got about 10 minutes to the end of the day, and then it's that winter chicken dinner kind of vibe, All right, now the only thing we're gonna have to do, guys, is if it does break one of these lines and start headed the wrong way, we're gonna highlight one side or the other. We're gonna look at that side, the put or the call, whatever one's about to start losing. Okay. Then we'll come over here and we'll hit close selected and we'll go to market close and we'll just wait. Whenever it hits that number that we've set for ourselves, either 30 cents or 40 cents on a 10-cent contract, or 30 cents to 45 cents on a 15-cent contract. Whatever number you set for yourself. Actually, it would be 45 or 60. It'd be 45 or 60, negative 200 and negative 300. So when you see the bid and the ask get to those numbers and you got that spread, just go ahead and just close it. Like I said, if you're only losing 1 out of every 10 trades, who cares? You won't get emotional about it, especially when you know that you have a win on the other side automatically. If one of these sides loses, the other side's going to win. So I get the premium on the losing side, I get the premium on the winning side. And that's how the other day, even though we took, I think, a negative $350 trade, we still only took negative 50 for the day, because the positive of that trade and the positive of the opposite side gave us almost all that money back. So when we lose 50 or $100. But when we gain, we can gain up to let's see here, 15 contracts on both sides would be 150. So optimally with 10 contracts, you'd be looking at $300 on the high side. So right now, everything looks really good. Okay, so it's pushing towards the call side. You guys can see that, right? So if it breaks this, we need to be ready. Okay, the worst case scenario is it goes all the way up to 52.60. If it crosses this line, guys, 52.60. If it crosses this line, we lose. And we could lose a lot. So we won't let that happen. If you're just now joining us today, I'm expecting to lose today. We joined this trade expecting to lose because we want to show you guys what that looks like. All right, these are high volume days. PSI, CPI, PPI, what did it say? CPI. CPI means we don't trade. FOMC, we don't take spreads. PPI, we don't take spreads. Anything on this economic calendar that shows up as red, we don't take spreads, because it could bring volume in at the end of the day, as we're starting to see here on this play. Yeah, it's not going anywhere, but these are some pretty tall candles compared to these little chitsy ones that we had before. 135, 140 took, now boom, we're at 140. People are closing their positions at the end of the day. They're maybe getting ready for stuff for tomorrow. It creates action. Another thing is 330. I don't know if you guys know this, but if you do a credit spread on Robinhood, they will close you at 330 automatically and make you take a day trade. So that we don't do this on Robinhood. No. They will make you take a day trade, and then they'll close you at a higher value than anybody would have bought it for. Nobody would. I mean, I've literally had options that were worthless since like 10 a.m., 11 a.m. back when I used to run this all day. And Robinhood would close them at 3:30 and say that somebody somewhere gave them a nickel for it. Like, come on. You just took back half of my profit after a whole day of trading. Get out of here with that crap. All right, so for right now, our calls look great, guys. Even though it has this pressure to the top, Theta and Delta are our best friends right now. They are beating that contract back down. So it's going to take a larger swing at the end of the day to knock you out of these trades. We're down to 5 minutes, guys. 5 minutes, 6 minutes, 6 minutes. Here we go. I'm going to get some water. I'll be right back. Now, as far as stop losses, guys, they don't work for this stuff. Oh, wait. I can't have this song. Hold on. Give me a second. Sorry. Nope. I don't want to get in trouble. Okay. Whoo. I don't want to get no strikes. All right, guys. Towards the end of the day, nice little strategy you can run. Do not set stop losses. They don't work. In this situation, your entire account is on the line, most likely. It's a lot of money. You can't leave the trade. What I just did to get water, you can't even do that. I forbid it. You're not allowed to do it. You got to be ready with that market close. Right now, I'm still on the call side. I would just hit close selected if all of a sudden it popped to the north side. And I would come over here and I would market close. Do not limit close. You have to get out. It's bleeding, guys. Market close. Sometimes I get weird lag at the end of the day. There we go. I think it's the streaming maybe. Okay, so you would have the market close ready, and you would just watch the bid and ask. So for a 10-cent contract, you would be looking at an exit right around 30 cents, no more than 40 cents. So as soon as your bid is at like 25 cents, you know that it's there. So you can literally just watch the bid and watch for a nickel under whatever you want to get out for. Now, guys, when I do these market closes, they almost always end favorably for me. Almost always end favorably for me. Oh, looks like we might be wanting to crack. Guys, just because we got 3 minutes left doesn't mean nothing. You have to be ready. You got to be ready. You know? And like I said, when you have a 90% success rate, you don't care about losses. You don't care about losses. You won't even lose that much on the day because we've already been paid $200. So if I go negative 300 right now, we've already been paid 200. I'm only down $100 today on a $5,000 account. It's nothing. It's literally nothing. All right, but as of right now, everything still looks good. All right, nice and red, baby, red. There we go. All right, everybody, we are 3 minutes away from that winner chicken dinner. Now, can you close these early? Yes, but you'll have to find a buyer. In order to find a buyer, you have to give it a price. You will give back a nickel of the 10 or 15 cents. It's not worth it. Not to mention, it's going to expire worthless in more than 90% of the situations. So you're not even using day trades. They make sure you don't day trade more than 3 times a week if you have less than 25 grand. But these aren't using day trades. They're expiring worthless. Both of these contracts are going to expire worthless. So, you know, that, well, hopefully. So that right there gives you the protection. Cool. 2 minutes. 2-minute warning. Here we go. Pump it up, baby. Pump it up. I don't love being this close to the money. I would love. So normally, if we weren't at like these all-time highs, you would have multiple support and resistance lines in between you and the current price, or, you know, the strike that you picked and the current price. You would have all sorts of like lines, you know, resistance, support that are going to stop this thing from moving. We don't have that right now, or at least I haven't gone back far enough to find it. So if it cracks this, I don't know what's going to happen. I'm genuinely worried that we could absolutely be in the money and lose all the money. So let's just keep calls highlighted. Let's keep close selected because we're experiencing a lot of lag issues anyway, right? So let's keep that selected. Let's put on market. Give it 5 seconds to catch up because apparently that's how long it takes. Almost exactly 5 seconds. And then just keep it here because, I mean, even at the last couple seconds of the day, this thing could just whoop and take off, right? So right now, it's winner chicken dinner. We are down to 45 seconds, guys. 45 seconds. Here we go. Woo! All right, guys. Honestly, we're going to be doing this every day. Credit spreads are super fun. It's something you can do in the last 30 minutes of the day. It's either going to add a cherry on top. Yeah, Dumperooski, baby. It's either going to add a cherry on top if you had a great day, or it's going to just be a little bit of money back in your pocket if you had a bad one, right? So if this isn't going to make anybody rich overnight, but I have been able to double an account roughly every 3 months. You can double your account. So take 5 grand to 10, take 10 to 20, take 20 to 40, take 40 to 80, take 80 to 160, take 160 to 320, take 320 to 720 or 740, and from there, you know, you're a millionaire. So it's absolutely doable. And this is literally the only thing you would have to do every single day to steadily grow your account. So it's what I'm putting most of my money in. I'm getting a big lump sum of money here in a couple months. It's what I'm putting most of my money into. I am going to be shorting with deck though, because that stuff's just, it's like stealing candy from a baby. Shorting is so stupidly easy. It's just, I don't even understand how it works so good. So anyway, so yeah, I'll be doing shorting in the morning. I'll be doing this at night. Right now I'm doing futures during the day. I don't know if that's going to be something I continue to do. I don't like to watch a screen all day long. I like to just come in at the end, get a few plays. Guys, let's just take a quick look before we go. WGS is still holding strong from yesterday. That was the call from yesterday. We're at 30%. If you guys got that, take that, get that money out. Don't give it back to the market. I'm just leaving it open because I want to test it. I want to see where else it's going to go. And hopefully Bros is a nice one for you guys too. So those were the plays from today, guys. Let me go and get rid of this music that is basically drowning me out right now. Okay, cool. All right, so that's basically it for my show today, guys. I'm gonna do, like I said, I'm gonna do this pretty much every day. If not, I'll put something in chat here to explain why and let you guys know that I won't be there that day. But this is something we can just slap 100%, 100%, 100%, 100%. You guys are gonna see your accounts grow, 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 grow. If you want to know more of this kind of stuff, just put some stuff in chat, questions, whatever you might have, and I'll try to go over it with you. Thank you very much for watching. Thank you very much for being a part of this. I am absolutely having a ball doing this with you guys, and I hope you guys are having some fun too. All right. Later, guys.